What's going on, everybody? Good evening. Sorry for the delay. My apologies. Certainly infrequent that I'm late. Just not feeling 100% tonight, but definitely don't want to leave us all out to dry. So I'm going to rally and we're going to have a good class. You got it. Good to see you, Husky. Hey, Charles, welcome in. You got it, Rudy. Yeah, better not be the flu. I'm all right. It's not too bad. Just not feeling 100%, but that's okay. Should still be a good class. What's going on? We're going to give it just one more minute and then I'll get started. I know we've all been waiting, so I don't want to hold this up too long, and we'll get the show on the road. Any questions or comments, concerns before we get this one going? Right. Yeah. Talk about quite the day today in markets. Yeah, there's definitely a great point there. Things were looking real great, and yeah, certainly didn't play out that way into the close, which is always exciting. Always exciting for sure. Send this last message out here. All right. What happened there, Rudy? That was all FOMC related, so all news related. So 11 a.m. you have the minutes release, 11:30 you have the conference call beginning, and then around noon-ish is about when Powell probably started to answer questions, maybe a bit earlier than that. Ooh. All right, let's get the show on the road, everybody. Welcome into the lecture for the evening. As you probably saw and realized by I'm a bit late, not feeling the best today, so probably going to have to end up cutting this one a bit shorter than normal as we've already done a bit. So I apologize for that, but still going to do my best to make sure this one is of tip-top quality as much as possible. So big idea of today's class, the title again, as I mentioned in the tab, is Advanced Technical Analysis. And now that term really means kind of nothing by itself. I don't necessarily expect people to look at that and think, oh yeah, I know exactly what we're going to cover tonight. But advanced technical analysis, really, the big idea tonight is to start looping together all the ideas that we've begun to talk about throughout the last really 2 to 3 months at this point in time. So that's really where we're headed for the evening. Yeah, just to kind of kick it right off, I want to start by just taking a quick look at the daily for SPY. I feel like it's a reasonable place to start, pretty logical in terms of significance, and also this is likely something that's familiar to most. So kicking things off here, and just as a reminder of what we talked about, let me pull up our slides real quick. See if I could find it. Let's go. So here's where we are in the course series. So we've covered all the basics. So the basics of options, kind of how the market moves, talk through the Greeks, candlesticks, support and resistance, a little bit of talking about price action, indicators, trends, patterns. Last week was sectors. And today we're really going to start to work to combine all of this together. Ooh, I'm not feeling that great. All right. So talking about what we've covered so far and how it relates to this chart. First of all, a couple things going on here. A lot of different things that we've talked about. First, most obvious thing that we can see on the chart here is a whole set of levels, right? Reminding everybody of the significance of levels in the market. Obviously, they don't provide the whole picture, but levels always act as a kind of, at least the way I like to draw them, levels should always be some kind of significant prior or potential future turning point. And what that looks like is, for example, these levels here, these weekly pivots that I have in orange, were previous swing highs. So let me just save this as something that I could draw on here. So we have previous swing highs marked off as levels here. Previous areas of consolidation, multiple bodies touching that spot there, and previous all-time highs, right? So previous all-time highs here. And I also have the previous all-time highs marked up at the top side of the chart. So that is always going to be kind of the starting point, at least in terms of any kind of frame of technical analysis. And just to give a little bit of the deeper meaning behind why those levels can be so significant is that when analyzing a trend, and let me just get kind of a blank drawing space here. When analyzing a trend, lots of traders are also paying attention to similar concepts, the same market structure, and the same patterns. So when we have a structure like this, I'm just kind of drawing something out roughly, pretty similar to what we have in our current marketplace. For example, this point here, right at this spot, is always going to be a significant level, right? Because this was the prior all-time highs. Prior all-time highs in any financial market are always going to be something of significance. The next real important level that I want to talk about is kind of that first, or I guess this first shift in structure, right? So not necessarily a level, but this first noticeable change in price action, right? So if we analyze this kind of very simple line graph here, it's very easy to tell that this point to this point is much different than this point to this point, right? In this specific segment of the trend here, textbook example of a downtrend, right? Lower lows, lower highs, easy, right? Here in this section, we have our first change of character, right? And you'll hear me use this term change of character a lot throughout this class. It's a term that I like to use when something is just different with how the stock is behaving. And this would be an example of that change of character. And to draw that analog on the SPY here, this would be the first change of character, right? Our very first major higher low here on the weekly. So here, lower lows. This is our first, can draw, make it more clear. This is our first major higher low, right? So generally the most significant place after that higher low to be watching is the lower high before that, which in this case is going to be this pivot right here. So this is the high we set before making this higher low. If we are to break this high, that will begin to signify that the market structure has reversed and a potential uptrend is beginning, which, as you can imagine, is very significant, especially for traders who are trend followers, especially who are funds who are following trend, right? A lot of people are paying attention to the structure of the marketplace. And if we see these prior highs taken out, especially with some strength on a move like this, right? That's going to be something that allows multiple other people to begin to get involved in the market. And it's going to be something that we want to pay attention to additionally. So taking a look at that here, you could see what that previous lower high looked like. So the previous lower high before this higher low, right about here. And I mean, even if we just go to something clean, no indicators at all, it's very easy to tell that this level proved to be significant, especially when we broke it back above it, started to get some healthy consolidation over that spot. Very clearly a level of significance here, right? So that's going to be kind of the most important thing, at least in terms of looking for a trend reversal and how it relates to levels. You want to be paying attention to that first higher low and look back to the previous swing high before that and pay attention to that spot when we break it. And this idea can be replicated on plenty of different time frames, plenty of different structures. For example, taking a look at the current trend in the market, if I clean this up a bit. One example of the opposite scenario here is here we set a higher high. And some might argue that this-ish was kind of that first example of a lower high, right around here, right? So we set a lower high somewhere around here for the first time really ever throughout this uptrend. As a result, now that we've set this lower high, we want to be looking to the previous significant higher low, which that might be this level right around there. Another level of significance might be this gap. Two levels of significance. And just taking a look at that on the weekly again, zooming out a bit, might be a bit more clear. Not quite, we'll step up to the daily. It's very clear to see how sentiment has changed the first time we were at this higher low and how we were the second time we revisited it, right? When we were setting this higher low the first time around, We had a couple wicks off of this level, reasonably high volume as we approach this low pretty much every time, right? High volume here as we approach the low, here as we pass through the low. Here, something different has occurred, right? We had a previous strong pivot in the trend, and now we're seeing a breakthrough that pivot on elevated volume with a bear bar closing near its lows. Now, this is never going to be a bullish indication, and it's something that can be identified in real time, right? It's not something that you can only look back on hindsight months later and say, oh, yeah, this was a time to start to maybe not be as bullish as I was before, right? And we can look through my tab, we can look through anybody else's analysis in the server and see this type of information identified in real time, but that's not necessarily the point of this lecture. The big idea is really getting you to understand not necessarily how to find this level, but why it matters so much than just any other, breakdown, right? Really, the idea that I want to convey throughout the course of this lecture is understanding the significance of market structure, not necessarily understanding how to identify it, but understanding why it matters so much. Over the last couple of weeks, we've certainly introduced the tools and tricks in order to identify the things that we need, but we haven't gone into detail on why it matters so much. And I know this introduction was a little bit scattered, but before I go any further, anybody have any questions, comments so far? Yeah, sorry, I feel like I'm not 100% tonight, fellas. Rudy's happy. All right. All right, let's keep this going. So I really want to zone in on this specific example because this so far has been a very, very easy idea to capitalize on. And it's happened, just in the past couple of weeks. So let's simplify this again. Let's first start with the basics and forget about looking for this trend reversal. Here, anybody would argue we have an uptrend, right? Cut and dry uptrend. We can mark out our higher lows here, higher highs. Pretty much a textbook uptrend, right? I mean, price is clearly moving to the upper right corner of the chart. You could even just look at that. Very clearly, price is setting higher lows and higher highs, right? Textbook uptrend. Always what I'm doing in any trend is I'm paying attention to prior pivots of significance. So places where price stalled out in the past and set a higher high, stalled out in the past and set a higher low. So that'd look like a level like this, right? Price set a higher high right here. It would look like a level like this, right? Price set a higher high right here, almost a double top, micro double top. It'd be a level like this. 3 wicks off the exact same level. It's pretty suspicious. A level like that, previous higher high, and obviously our all-time highs. Moving on. This level here was a previous higher high. So let's label this. Make that clear what that is. This is our all-time highs. And this is our prior higher low. And what really matters about this specific example is identifying the warning signs when the trend started to seem like it was no longer in favor of the bulls. So first things first, right? First warning sign is this big bear bar, right? Big bear bar, outside day, on elevated volume. We haven't seen a bar like this throughout this entire uptrend, but that's not necessarily the point of this specific topic here, but that's your first warning sign, right? That's something different. That's the price action changing character, right? It builds that argument, hey, something's starting to change up here. If you look through this entire uptrend, we didn't see a single candle like that until right there. That's the first time we saw a bar that looks like that. We look back over the past couple of years, we can see the last time we saw something like that was probably around here, around these prior all-time highs, and when this downtrend started to kick off, right? Where we see these big bear outside bars here. Yeah. So not a common occurrence, especially in this recent bull market. So when you see a bar like this, that's kind of the first reason for the alarm flags and alarm bells to start going off in your head. Next kind of warning sign here is we broke below this previous higher high, right? Which that isn't necessarily something to be too worried about all the time, right? That's very reasonable to see the uptrend kind of break structure just a little bit, dip below the previous higher high, right? We're not always going to see trends that look like this, where it's just perfect. We come back, retest the prior high, and just go right off it higher, right? So this would be something like this, where we're just holding that previous high and never looking back. So not necessarily a realistic scenario there. So it's reasonable to see us dip back below this higher high sometimes, maybe look a little bit more like this, right? Come back below a bit for our test. That's fine, right? Nothing wrong with that. Still trend is up. So we do see that that lower high was starting to be created. We also see that we started to break through this prior higher high right around here. So two kind of other reasons to be just considering that, hey, maybe something's changed, but not anything to kind of write home about just yet. The final red flag that should really get you to think is this significant breakdown of this prior higher low. As we talked about before, and we've introduced in many of our classes, the structure of the trend is the structure of the trend, right? It is defining what the direction of the trend is in any given instrument in any market. And once we break that structure, the trend is no longer the same, right? So this was something that I was mentioning in my tab. Once we broke this 508 level, especially on volume like this, we're not in a short-term uptrend anymore. We're now in a short-term pullback, right? And you look out on the weekly chart, we're still fully in an uptrend, right? So there's no denying that this is still an uptrend. However, we are absolutely in a short-term downtrend, and we have remained in a short-term downtrend. And the reason that identifying something like this is so important, and if you don't care, you should care after this, is that when the trend is in favor of one side, the probability of those types of trades working is higher, plain and simple. And the market is a game of probabilities. We want to maximize our probability of being right and being successful at every juncture we have available to us. And in this case, the probability of bulls being correct as the trend reverses to a short-term bear trend decreases, right? The probability begins to be more in the bears courts or the shorts courts or people looking for the market to move lower, however you want to call it. Everybody following with me so far, and we got iPhone asking, is that a pennant? I think I have it drawn technically as like a rising wedge, but you could call it a pennant. Not really too concerned about the name. Cool. So as I mentioned, right, identifying that change in structure is one of the most important things you can do in your trading because it gives you justification to begin to switch your bias. Because those of you who have been trading actively over the past 2 weeks know that the market has been more volatile, it's been more difficult, and it's also been probably more difficult to trade calls because the rest of the market is in a downtrend. So when that happens, the other side of the coin becomes more difficult to trade unless you are at some kind of overextension or strong support. I'm not going to lie, everybody. I kind of feel like I'm about to throw up. I'm going to probably give this another couple minutes, and I think I'm going to need to go. I really apologize. I want to get to a couple more points. I want to at least finalize this trend example, but I've never actually felt like this during lecture, and I'm not happy about it. All right, let's talk a little bit more about confirming this trend breakdown. Getting into this little EMA study set here. Oops, wrong one. Oh, man. Honestly, I think I got to go right now. I'm going to, yeah, I got to go, everybody. I really apologize. I am not feeling good at all. I'm really sorry, but I got to bounce. I hope you guys have a good night. I'll make it up to you and cover this in my tab. I got